and welcome to our webinar on the future of broking in the UK. I'm Dan King, one of the co-founders of Insurance DataLab. We have a fantastic panel of experts for you today, but before I introduce them, my fellow co-founder Matt Scott is going to reveal some of the key findings of our new broker performance report, which ranks the largest 100 brokers in UK GI on financial performance over the last 3 years. These ratings are based on profitability, growth, and productivity. Over to you, Matt.
So, the main finding from our research is that the market at an aggregate level has performed quite consistently over the last 3 years, and that's despite the impact of the pandemic. Indeed, over the last 3 years, the average broking rating we gave brokers has been in and around 53%, rising by just 0.4 percentage points over the last couple of years. Of course, some sectors have taken a bit of a hit, with a number of travel insurance brokers, unsurprisingly, experiencing a big drop in performance in the wake of the COVID-19 travel restrictions. But if we move away from some of the different sectors and look at the results by size of broker, we can see that the largest brokers in the market, and in our research, that means those with revenues in excess of £500 million, have performed the best over the last 12 months. But that hasn't always been the case. So those large brokers picked up a broking rating of just under 58% on average for 2022, which is up from 53% in 2020 when they were ranked second in our list. And that's a bit behind brokers with revenues of between 100 million and 500 million pounds. Growth has been one of the big driving factors behind their success, and acquisitions will obviously have played a big part in that, which I think we'll come on to later, Dan, in the discussion, but also in terms of kind of growth and profitability as well. But when it comes to productivity, it was those mid-sized brokers with revenues of between 100 million and 500 million that actually came up with the best rating for 2022. Now, obviously, these brokers still have a decent amount of scale to draw upon in terms of kind of efficiency savings and additional resources. But it was interesting to see this, I suppose, scale off a bit in those large brokers with revenues above 500 million pounds. They're actually only slightly ahead of brokers with revenues between 10 and 100 million. So I suppose those were the key findings there, Dan, from the research.
Thanks, Matt. So based on this research, we're recognising those brokers who have delivered best-in-class results with an Insurance DataLab Gold Award, and the honour of being the #1 best performing broker in UK GI with a rating of 74% is Miller Insurance Services. Other Gold Award winners are RSC Financial Services, JCB Insurance Services, EUI, Roanoke International Brokers, Potters Bar Services, and Hearts Insurance Consultants. So many congratulations to all 7 firms. The detailed results, along with further analysis, is included in our broker performance report, an abridged version of which will be sent out by email to all of you who are tuning in live. If you're watching a pre-recorded version of this session, you can download it for free from our website at insurancedataLab.com. And if you would like to see the data that underlies this report, as well as the other types of data that we use to keep track of company performance across areas such as underwriting, customer experience, and complaints handling, you can request a free 14-day trial of our digital insight platform by contacting me via the website. Now we'll delve a little deeper into how the market has been performing and what the future holds with our esteemed panel, the recently appointed chairman of Hastings Direct, Mark Cliff, Julyfourth Services owner Andy Fairchild, and WTW Networks commercial director Lynne Norledge. Welcome all, and thanks for joining us. Before we get started, I just wanted to point out that we'd like to make this discussion as interactive as possible. So please do submit any questions or comments you may have by clicking on the Q&A tab. So Mark, if I can come to you first, what do you make of some of the findings of the research that we've just outlined? And I'm particularly interested to hear your thoughts on how the size and scale of a broker can present different challenges and opportunities.
Yeah, thanks, Dan. The findings are very interesting for a number of reasons. Firstly, I think what it shows is that the results indicate the resilience of the broking business. You know, we went through a pandemic, all the changes that took place, and yet, you know, the results held up during that time, and indeed many businesses grew during that period. And I think underpinning that as well is that we mustn't forget that you know, there's a lot of focus, I think we'll talk about today, about M&A and technology, but it's about people. And I think that the focus has been on people, the way they work, the retention of people, has also been an interesting change in the broking business over the last couple of years, and I think will continue as a theme. But I think the war for talent and how we keep great people, grow people in, it mustn't be forgotten in all of this. And at the end of the day, they've been the people who've been interfacing with customers as well during, again, what was a very difficult period with the likes of business interruption. I think from the findings you touched on, M&A has been a key feature, and I think we've probably, I remember sort of Tony Canal, if anyone remembers Tony, going back to the old CU days. You know, Tony would always say that the you know, brokers are so resilient, the numbers will always be growing, there'll always be startups. I just wonder whether we've hit a slight change in the market, that the M&A activity has been so great. There's more private equity investment in the broking market than there's ever been before, and that in turn impacts on the shape of decision making in the sector. You only have to look. You commented in the report around the number of transactions that have taken place, but we're probably not seeing the number of startups that we used to see. And I think the impact of regulation has meant that the shape of the market is definitely changing. So I think that's, you know, something else that's very interesting. And then I think the other bit that we will touch on is this whole area of technology, and that can mean so many things, but data analytics, understanding your customer, and let's be honest, technology plays such a key role in all aspects of our life. You know, we all sort of use these things pretty much for everything now. So how is that impacting the broker market? So I'm not sure there's ever been a more interesting time for brokers, nor more opportunity, but it does mean some element of reinvention. And I think what you'll find in say is that clearly scale is now playing is important. That, you know, growth through organic growth is critical. M&A has been a factor, but equally you've got to turn that into organic growth. And I think your productivity is really interesting, because what it says is that where has the focus been on being more efficient in the market? And I think a lot of the larger brokers they've been industrializing M&A processes. They've been looking at how they make technology work for them, what their ecosystem looks like. And I think there's work to be done in some of the other sectors, particularly around how to be more efficient. And I'm sure we'll touch on that later.
Yeah, thank you, Mark. Yeah, that's great. And Lynne, WTW Networks obviously works a lot with its members to help grow their business and improve efficiencies. What are you seeing as the big trends in the market at the moment?
Well, I think Mark really hit the nail on the head with the first thing he said there, is this business is still all about people. And it always has been. I think it always will be. And one of the most noticeable trends that we've seen, and I suspect we'll see a lot more of it, is businesses who are building their services around their client relationships rather than traditional insurance broking. We've built our client relationships around the services we offer. we're seeing adjacent financial services companies coming into the broking market, people like investment brokers, capital finance, energy brokers, looking at their client base and thinking, what more can we offer to these great client relationships that we have? And general insurance broking is one of those services that they can offer. And those companies we've seen are growing very, very quickly because they've got existing fantastic relationships that they can sort of add growth into by offering an adjacent service. I think we'll see a great deal more of that coming along in the future. And it's certainly where we've seen, because you're quite right, most of what we do with our members is all about growth. And there are lots of different strands to doing that through acquisition, through organic growth, marketing and the like. But where we've seen the real, brokers racing with growth is in these adjacent industries who are looking at how can we really maximize our client relationships. It does make me wonder, when will the insurance brokers start thinking, what other non-insurance services can we offer to these great client relationships that we all have, with our clients? So I'll be interested to see if it starts moving the other way slightly and we start, moving our way into adjacent industries too. So that'll be one to watch, I think.
Yeah, great. Thank you, Lynne. And Andy, you do a lot of work with independent brokers. What are you seeing as some of the main challenges and opportunities that are facing them?
I'm going to start with the war for talent because it's just so important. Mark and Lynne have already mentioned it, but what did we see yesterday in the UK? More job vacancies than there are unemployed for the first time ever. I mean, it's extraordinary. It's we've always talked about people, we've always talked about talent and how important it is. But I do think we are in genuine, extraordinary times, and opportunities for independent brokers on the back of that. Stay close to your people, get them involved more closely in the business. Give them that kind of altruistic feeling of what they're doing day to day, which is a little easier to do when you're an independent entrepreneurial business than if you're a big corporate. Just simply is. So kind of take advantage of that. So if people would be the first thing. Secondly, it's again a kind of well-trodden path, but I think it's as critical now as I've seen it in my career, which is the service provision from the market, from insurers. It's a challenge for independent brokers. It's a challenge as you get a little smaller because your voice just gets more difficult to be heard. So the independents are concentrating more and more on their placement strategies, more and more on their partnerships with the market, and things like memberships of networks, as me and Lynne and many others know, are critical. So if it's it's people, it's relationships with the market, and then thirdly, something that I know we're going to talk loads about, so let's just flag it, is use of tech and use of technology. Big challenge for independent brokers, but I think they can be, again, differentially advantaged simply because the key challenge for me is not actually about what the tech can physically do. It's about how you make use of it. And most of the studies say there is unused potential in the tech that sits on most brokers' desks. Lots of unused potential. So if, as an independent, you can put the time in to sort of break through some of the understanding of what the likes of CRM can do for you, making best use of technology, and then get that into change processes in your business that improve your efficiency and effectiveness, then that's pretty key. So people, service from insurers, and the use of tech, and I know we'll develop that last one a little more as we go on today.
Yeah, Matt, what are you seeing here?
Yeah, so kind of I agree with what everyone said so far, really. For me, I think that the big one's technology, because I think it feeds into, I suppose, so many different areas of the market. So I was on, watched the Future Insurance Distribution session at BIBA last week, very similar title to this one. And technology was one of the key kind of topics brought up by the panelists there. And I think, regulation is making it increasingly important. We've seen things like fair value come in, and also the cost of living crisis as well, we're all going through at the moment. Brokers now have to demonstrate that they're adding value at the various different stages in the insurance life cycle. And I think technology can really help take some of, I suppose, the more mundane tasks and automate that. And that can free up their time so they can focus more where they can add value to the transaction. Not only will this help with things like productivity and, broker's own efficiencies, but it can also help their customers by, facilitating lower premiums for those vanilla risks at a time when I suppose inflation is running so high and putting a lot of people and businesses under a lot of pressure. And then, it's interesting that kind of all of our panelists mentioned that war for talent as well, because I think technology has a point to play here as well. I suppose, if you're automating some of those more boring and mundane tasks, then that can, free people up to really focus on more challenging work and can allow them to develop their skills and get stuck into the interesting stuff. And I think at a time when the war for talent is so strong, I think that can be a bit of a kind of boost, I suppose, to getting people through the door and acquiring the people you really want in your business. And it can also help with things like talent retention as well, and helping to boost job satisfaction amongst a broker's staff.
Thank you. Mark, how do you see technology affecting the broking space?
I think there'll be a change in the way technology is used in the space. I think I always worry a little bit about people talk about a technology strategy. I think it's a business strategy that's technology is the enabler. And I think as brokers, what you've got to think about is, what do you want technology to do for what area of the business? Is it you want to improve your customer experience? Is it you want to improve your data and analytics? What is it you want technology to do? Because I think in the past it's been, here's stuff off the shelf, take it, and you'll be able to run the business. I think we're into a different era as far as technology and broking. And I've seen some, as I said earlier, all parts of our life now, there's elements of where technology, everything is done by technology. I saw at Bieber, I saw a system where you scan the QR code, you answer 2 questions, and you get your household quotes. And that, in under 15 seconds. I work with a technology platform that has all the congestion charge, toll roads, parking details, as well as doing insurance. Tells you when your MOT is due, everything to do with the car in one place. So the amount of data that collects, and there's no reason why brokers can't plug into this technology. And I think in InsurTech, people have thought, well, InsurTech is something that sits outside, and then we have broker software houses. The reality of the world today is, and I kind of slightly hate the word, but you can't avoid it, is more and more people are building what they term as their ecosystem, of saying, who can I work with to be more successful? And that's where InsurTech, that you can plug InsurTech in support of, doesn't mean you have to get rid of your other systems, which it used to be in broking before. You can now plug in an InsurTech to say, because I want that InsurTech to provide a better customer experience at the front end, but it can sit across everything else that is done through my software house. And indeed, some of the software houses are clearly looking at how they work with InsurTech as well. So that experience will be improved by the fact that the software houses are starting to look at their own ecosystems as well. But that will be driven by what brokers want for their customers or want for their businesses. So they need to get, make sure they've got a voice. We hear of others using AI to improve efficiency and get rid of waste in terms of processes. We hear of, MI analytical tools that produce customer information, kind of gets rid of the old spreadsheets that I still see, the Excel spreadsheets that people use in businesses. So I do, we've got technology that is pay as you go. That brokers before would have to think very carefully about what investment and how much investment they could make. Whereas now systems where you pay according to how much you use the system, the upfront development cost is an awful lot lower. And people are talking about things like parametrics. and parametric products. So again, technology can help brokers to get more access to customers with products that more suit their needs. So I do think it will go through, it will permeate through every part of a broker's existence. And I think what they must do is grip the opportunity, because I think, you know, get out, talk to some of these insurtechs, work out, you know, how can they help you work, make sure you've got a good, strong relationship with your broker software house, and that they are responding to the now, you know, and we hear things like people have got development stacks in IT of 2 years, so they can't do anything. Again, for me, it was great to see at Bebo, you know, one company saying, I can white label you a scheme in 2 hours. You know, that is, wow. Well, you know, if you're a broker, how do I get that? How do I get it? Because if I can do it in 2 hours, rather than, you know, a lot of insurers might say, look, I'll do it in 6 months for you, I'll fast track it, you know. That world has changed, but get out and talk to people. Sorry, I'm quite excited about that.
No, that's great, thank you. And Lynne, what conversations are you having with your members around technology?
Yeah, I mean, Mark's just painted a huge picture there of technology in insurance broking, and he's quite right, and it permeates everything we do. I mean, what we're doing here today is based on technology that we wouldn't have even thought of a few years ago. What we're doing with our members, if I can just focus on one sort of part of that, what is of most interest to brokers at the moment is the use of the data that comes out of that technology. Technology on its own is just an enabler. But our members are very interested and focused on what data is available and how can they use that data to move their businesses forward, to help their businesses grow and to enrich their customer experience. And that's very much part of what we do with our members, is talk to them about, you know, where their business is being placed, how it's being placed, you know, their interactions with their customers. And we have a very data-rich environment for them. And I think that's where the real value is coming out of technology. I mean, we're all up to, you know, this thing here, you know, that's, you can see my mobile phone in focus, that's got more computing power on it now than I remember my first employer back in the dot was very proud of their computer system, which was housed in an enormous building in London called Fox Court. I rather suspect this iPhone has got more computing power on it. And it's not so much the fact that it got that power, it's what we do with it and how we use it to enable growth, to enable you know, better customer experiences. And I think the brokers that really grasp that end of it, rather than technology for technology's sake, but asking, how can I use this? How can I make it better for my clients? How can I help it to drive growth in my business? That's where we're having the really interesting conversations with brokers. And obviously, yeah, keeping our eye out for parametric solutions are very much coming to the fore, and filling gaps in the composite market where the insurers just don't want to get involved lately. I mean, flood's an obvious one, where parametric solutions are really driving not just cover being available for that one risk, but for the broker's ability to build around it, where insurers might not have wanted to touch any of it in the first place. So enabling the broker to say, look, to the composite market, we have a solution here for this risk that you don't like. Take that out of the picture, have a look at the rest of it. So, you know, it's what can it do, not what is it in itself. And yeah, I'm very excited to see for the future, like, you know, what will the Fox Court, you know, what will make this look like Fox Court? That building housing the mainframe. You know, I'm sure in a few years' time, the speed of change at the moment is astonishing. And our job in this industry is to keep asking the question, how can it enrich our customer experience? How can it make our businesses grow?
Great stuff, thank you. And Andy, our research shows that some of the most efficient and productive brokers come from that middle tier of companies. So do you see technology as one of the key enablers for independent brokers looking to improve their productivity and to create a more efficient business?
For productivity, sure, of course. You know, we've seen the growth of, you know, it's interesting to compare and contrast the UK with some of the other geographies around the world, you know, we undoubtedly lead the world on this thing we call e-trading. You know, we've got a few decades now of getting broker management systems talking to insurers and MGAs and wholesalers and returning back for customers real-time risk acceptance, real-time pricing. We know that model. It is different, and we do lead the way for the world in the UK. So again, a question of making best use of it. You know, what do I see at the top end? I can find some independent brokers who have got 50% of their business e-traded. You know, but you can also find a whole bunch of brokers that are nowhere near that number. You know, and so again, that tech exists, that proposition exists. It's a question of making sure you're making best use of it. Why might you not be? Because you might not have the data captured in the right way. You might not have your internal processes organized in the right way. So all of those kind of things are in our, you know, in our grasp. So from a productivity perspective, a lot of roads I would suggest at the moment go to e-trading. But, you know, as Mark and Lynne have already called out, the use of data is pretty fundamental there, and that is the you know, the flip side of the same coin, really, in terms of the quality of data that you have, how you are using it to get improved risk selection and improved pricing, which in turn gives us better management of the risk. You know, so all of those things I think are up for grabs. All of those things are pretty fundamentally tech enabled, but an awful lot of that tech already exists. And so therefore, you know, back to how are we using it? Do we need to change our processes? Do we need to kind of educate our folk a little more? Do we need to make better use of our data? All those kind of things are in our grasp here and now. You know, there's no need to wait for it. So, you know, there'd be the reflections on productivity. I think we need to come back to the role of the software houses. It's critical, absolutely critical. And I'm sure myself and Mark and Lynne will do as we develop over the next half an hour or so.
And Mark, I know you've talked a bit already about the software houses and so on, but is there anything else you wanted to add around how some SaaS companies and other tech firms we've seen entering the insurance space might impact on some of the existing relationships brokers have with software houses or with insurer extranets?
Well, I think ultimately what the danger is that these new entrants at lower cost with you know, state-of-the-art technology, you know, could enter that space and therefore sort of eat the lunch of the software houses unless they respond to this idea that they don't have to do everything themselves and that they use the best of what's available. And I think that's the smart play for software houses, is to say, yeah, let's work with insurtechs, because some of these insurtechs, you may get to a place where, well, look, 3 years from now we unplug it because we plug something else in that's even more up to date. And the thing that I encourage brokers to do is to think about that ecosystem. Is you know, if you haven't done it, do a map of who are you dependent on for you to achieve what you need to achieve. What does that look like? How close a relationship have you got with those people? Because they're your, you know, if you're not close to people who you're dependent on in your ecosystem, you're probably going to fail, because you know, going forward, those relationships will be absolutely critical. And where are the gaps in those? Where, you know, Lynne touched on, you know, people moving into other markets. Well, how can you identify people who could help you to do that potentially as a broker and move into other spaces? What do you need to do? So I think for me, one of the big messages of the climate we're in today is you don't have to do it all yourself. And insurers haven't quite got over that yet. They haven't quite got their heads totally into that space, and they will eventually, but it's a lot slower process. Brokers have an opportunity now to say, I'm going to go out and work with these people, and change their cost model, make themselves more efficient, but actually providing a greater customer experience. So it's a big opportunity that is there now. Because it was interesting, wasn't it? Pre-pandemic, people used to say insurtech, I think it was something like 8 out of 10 insurtechs were failing. And I always would say the problem was there was a lot of people out there identifying. In the normal world, you have a problem, you identify the solution, and then you kind of monetize it. We had a lot of insurtechs who identified the solution, had no idea what the problem was, and no idea how to monetize it. Well, not surprisingly, those are the people who've disappeared. And actually, in the new world, you actually need a bit of, people who understand the customers to help ground solutions. And I think that's the perfect opportunity of putting together, insurtech, some great thinking out there with people in brokers who understand customers, and let's do it.
And you said just earlier about brokers don't have to do it all themselves anymore, and you referred a bit earlier on today about the white labelling that was being done. And Rachel Price just asked a question. I'm not sure if you can reveal it, but Rachel's asked who was doing the white labelling. Send
me an email separately, and I'm happy to answer it.
Right. Okay. Thank you, Mark. And obviously, to everybody else that's tuning in, please do feel free to ask the panel questions by clicking on the Q&A tab. And I know there are a few in here already, which I'll get around to later. But what I wanted to talk about now is kind of one of the biggest drivers behind the highest performance, or the high performance of the largest brokers in our research, was around growth. Now we've touched on M&A earlier, but with acquisitions, obviously it had a big part to play here. And in fact, last year was a record year for M&A in the broker market. Andy, what do you think has been driving this activity, and what does it mean for those independent brokers that haven't been snapped up?
What's been driving the activity? I mean, a couple of fundamental things, I guess. Let's not dwell on them, because I think this is a well-trodden path. But firstly is the availability of capital. There is just so much around, not just UK based. The Brown and Brown move from the US was seminal, I think. But so firstly, the availability of capital, sure. Secondly, and I think this is important, is fundamentally the high quality of the assets that are available. Part of that is how we have been pretty resilient over the last 2 or 3 years, and have been pretty resilient to sort of macroeconomic shocks over in the past. And it looks like there are some more coming, in the next few years. So interestingly, I think insurance broking per se might be a bit of a safe haven for some of that capital. And so therefore, if you're looking to deploy capital, looking at that, at insurance broking in the UK might be an obvious place to go. That's what we're seeing, and it's fueling the activity, has fueled the activity over the last few years, continues to do so. I don't think it will change. Probably get even more acute. What does it mean for independent brokers? Well, day to day, what it means is not a week goes by without someone calling them saying, "Can we buy you?" That's really what happens. What happens strategically is I think independent broking is starting to realise that just kind of selling out to one of the consolidators is not the only option. There are other strategic options for them. I don't think it's about a moment in time, for consolidators. I think the consolidators are still going to be around in a few years' time. So, if you are minded to play a mid to long term strategy as an independent broker, then you really can. The support in the industry is there for you to do just that. Always depends on the almost the mindset of the shareholders and the mindset of the management team. In summary, the availability of capital and the fact that it's relatively a safe place in unsure macroeconomic times, I think that's what's fueling it and will continue to.
And Lynne, what does this mean for your business as a network? How does it affect your members?
Well, consolidation is affecting all the networks in the same manner, really. Is that the more mature, larger brokers are selling out to the consolidators. It's reducing the number of independent brokers in the UK, and therefore, obviously, it's reducing the pool of brokers that networks are looking at. I think, I would say that some of the members who've sold up for significant sums would say it's been a very good thing for them. But for our members in general, I mean, there's a key thing here, that there is an opportunity for the brokers who are still independent to brand themselves as independent brokers and really sort of stand up and say, we are here, we are independent, we are owned by the management of our company, and really sort of, stand out with that and differentiate themselves in the market, which we're talking to our members about. There's not been a huge amount of activity in the market for that, but I hope it will become something that's more prevalent going forward, because there is a big distinction between brokers that have been taken into a consolidator and brokers who are still independent. And I'm not suggesting that the consolidated brokers act in a drastically different manner, but I think the perception in the public's eye is that a broker who is completely independent and owned by their management is somebody who is within their community and very embedded. So there is a lot of distinction to be made there. And I think the other big, and it was touched on earlier, the subject of startups. And I think we all have to play our part in the insurance market. Startups are going to become more and more important to all of us if we're going to continue to have a vibrant, profitable, growing insurance broking sector in the UK. We have to help and encourage startups. It's not easy in this day and age. There are quite high regulatory barriers to get over. There are still plenty of brave souls out there doing it, and I salute them. And as a network, we're putting a lot of effort in there to help them get over those first few years and help them grow and hopefully replace the mid-sized brokers who've been selling out over the past few years. So it's a very, very interesting time. I mean, the other way that it affects the network businesses, obviously, is that we see a lot of brokers now looking at the networks thinking, okay, is this a place where I can help protect my business and grow it in the current market situation? So I guess it's both a threat and an opportunity to the networks. It'd be very interesting to see how it pans out. But I agree with Andy. I don't think the consolidators are going anywhere anytime soon. I think they'll be around for quite a long time.
And Mark, aside from the acquisitions from the established players, these new entrants from outside of the traditional broking space that are coming in and disrupting the market, what are your thoughts on those and how it affects brokers?
Give me an example, Dan, of who you see as a disruptor coming in, or?
Oh, that's a good question. There's nobody I was thinking in particular, but I was just thinking about generally when people are talking about new entrants coming in from outside, so the insurtechs, for example, that are coming in and disrupting the space.
I think as far as M&A, insurance is generally a very cash generative business. That's why they love it. And actually, it's a cottage industry that's kind of being broken up, and that's the opportunity. But now we're starting to hear, of course, that there is a lack of targets, if you like, for acquisition as far as GI, and a lot of the funds have interestingly moved into the wealth management sector, where you've got all the proliferation of IFAs. So it will ebb and flow as far as, and you see people, some of the larger consolidators now moving into Europe, because the UK, there is that lack of targets to acquire. So it does say that there could be room for new entrants to come into into play to fill some of the gap. Maybe not quite the start. I mean, people talk about Lemonade, Marshmallow. They've got huge funding behind them. The question mark is, can they turn that funding? The word unicorn has become very, very popular, and something that InsurTech and FinTech strive for, but it's really proving the performance of those new entrants, and will they take the place of the more traditional markets, is still, I think, open for debate. And I think part of that is because those new entrants are predominantly tech-led businesses, and insurance broking, as we said earlier, is still about people and still about customers and how we interface with customers. So I think the jury's out on. I do think regulation now makes it harder for people just to sort of, I mean, at one point it used to be that every bank or building society or whatever thought they could just nip into insurance and make a few bob and, job done. You can't do that now. Regulation is a lot stronger, and I think that's a good thing. I think it's a good thing that there are more barriers to entry than there were, perhaps 10 years ago. So I do think that the shape of the broking market has changed. I think there is always interest in businesses that are very cash generative and are growth businesses that understand that, and it's how you can build. And I think, again, I come back to, for brokers, the opportunity is to think about how do you marry those two things together. I wouldn't worry about new entrants only if your intention is you're not going to invest in the business anymore. And if you're not, it's probably the right time to think about selling.
Yeah. Okay. Thank you, Andy. A lot of the brokers you work with, I'm guessing, will be quite active in the space that these new entrants are looking to work in. How do you see this affecting the market?
Dan, you're talking there sort of new tech entrants.
Yeah.
Yeah. So I think it points to the closeness that independent brokers have with their end customer and the power that we have over distribution. We've already called that out. Mark and Lynne have already called that out. So if that's going nowhere, which that needs to be our bedrock, I think, as independent brokers, then okay, how do we enhance that? So I think it comes back to data. So the question for the independent broker for me is, what data have you got on each of your individual customers, and where are you keeping it, and how easy is it to access? Because then when you ask the question of so what, I've got this data, so what? It's got to point to things like improved risk selection and improved pricing and improved sort of loss ratio performance on the business that you're introducing. If that kind of thing can be derived from the fact that you are close to the customer, you've got great data on the customer, you can codify it in a way that you can get to your insurer partners, MGA partners and the like, then you're starting to build some processes there that are a differential advantage and that are hard to crack because you're so close to your customer. Interestingly, you saw, right at the edge of insurtech, I would go to, Tesla or Elon Musk entered the debate yesterday. He said, look, don't rate motor insurance based on sort of any on 21-year-olds in general. Rate it on this 21-year-old's driving habits in this car. It's getting very, very, very personalized. That's at the extreme, I would suggest, but let's learn from that. I don't see any big sort of Tesla or Uber moments into the UK industry, simply because it's such a complex model, complex distribution. But if you kind of learn from that, then that lends itself to what advantages of the likes of Tesla got. Well, they're close to their customer. They've got phenomenal access to data. They can codify it in a way that is then usable by risk assessors, by insurers, to then decide on accepting risk and pricing for risk. So, and I think independent brokers in the UK are kind of sitting on that already. So it's a question of you just simply making use of it. And again, same story really. Right at the heart of making use of that sort of ecosystem that I've just outlined are the software houses. They are critical, absolutely critical to pull this together. And Mark's already called out, you know, my call to them would be to be more open. Would be to you know, allow yourselves the ability to link in with other databases, other tech providers, and in turn to sort of develop that tech proposition that brokers can take advantage of because they're close to their customer and because they have access to this data.
Yeah, brilliant. Thank you. And Mark, I think you had some interesting thoughts on how brokers might also be able to move the other way and perhaps disrupt some markets themselves outside of the traditional insurance space.
I think we've touched on, so the first one is to embrace technology and to identify the insurtech, you know, what would make a difference in the business to allow you to disrupt in a segment that you want to move into. Andy's touched on the second bit, which is the biggest trend of all is data. And it's data and analytics. You know, brokers have got, I always say that brokers have got lots and lots of data, but they can't do anything with it. So it's how do you make sure that you've got data that you can feed back into. I mean, just have a look at how, you know, motor insurance, let's take that as most insurers now, there are in excess of 200 rating factors to come up with a motor insurance quote. In home, it's in excess of 100. And every day, everyone is looking to build in new data that help to differentiate themselves from their competitors. So you know, look at brokers in niche businesses. You've got stacks of data on those niches. How are you using that data to actually then, you know, to differentiate yourself? And I don't see enough of that. I think from say, what's your data look like, as Andy said, clean data. How are you and what are the analytics? I mean, if you go back to the people bit, the new skill set in broking that would need to be more of is data analysts. Now, how many people are thinking about? I know the insurers are. I know the larger brokers are in terms of building up data analysts, as to building up links with universities, but it is going to be the future of how you interpret and use it and feed that data back to your capacity providers. We talked about the importance earlier on of working with your partners and saying, well, I've got better data that can influence, and then is that data predictive? If it's predictive, then it will influence pricing, but it becomes more around using that to then go and disrupt and dominate certain spaces in the market. And for me, the data and the analytics piece is massive. We're only just scraping the surface of it, frankly.
Yeah.
And sorry, and just on that, we think of data just as the stuff as well that's in on our screens that we've got from customers. There is so much data in the business that you've got from static info, such as emails, all around the, you know, and one of the major international brokers done a major piece of global piece of work where they managed to extrapolate key data from all the emails that flow through the business. So instead of it just being a dead, oh shit, I've got all those emails sitting there, they're actually using it to create data that they can use back with customers. Now that is smart. And that's the way thinking about data. All the data is in your business, not just the stuff that is on your screen. And there is so much data around the business. You know, the way that your relationship managers communicate, what the communications there, how are you using the data that comes out from those conversations to then turn that into something that will give them a better advantage? That's the future.
Okay, thank you. I mean, Lynne, how does all of that affect your members?
Well, I think our members, in common with all the independent, well, most independent brokers in the UK, are very entrepreneurial. They have to be building the businesses that they've got. And if we think about data, it's effectively data is simply, a word for information. What do we know about our clients and our business? What information do we have on them? And quite frankly, an insurance broker, we practically have their inside leg. We know when their birthday is, we know what their hobbies and interests are, we know all about their risks, their liabilities, their assets, their profitability in their businesses. We have an enormous amount of information on those clients. But the key thing is we also have those relationships with those clients. I think data without relationships is simply dead information, but data with relationships is very, very powerful. I'll refer back to what I said earlier on in the session, where we've got new entrants coming into the market from adjacent industries, and we've talked about the barriers to entry through regulation. But if you look at the type of businesses that are regulated by the FCA who aren't insurance brokers, and there are very many of them, I think insurance brokers could be quite happily disrupting adjacent industries with the kind of information we hold. So they could be doing that model of, here we have great client relationships, we have a lot of information, data about those clients and what their needs are. How can we think more sideways about what their needs are? We don't necessarily need some flash technology to do that. We can use the data we've got, all that information we've got, and those great relationships we've got, start disrupting some of the other regulated industries. We're already in there, we're already regulated. We know that burden of regulation and we deal with it every day. So we can look at other regulated industries. We're not, we're not a supermarket or slot. We're regulated brokers. We know how that works, and we can start looking, I think, more sideways and disrupting the very markets who are coming into insurance. I think we will find that the regulated industries themselves become more blurred across the lines, and not just like, shall we look at life insurance? And should we look at wealth management and that kind of thing? There is an enormous array of industries there that we could very easily be disrupting on what we already know and the relationships that we hold with our clients and through the networks with our members.
Thanks, Lynne. And Matt, what are your thoughts on all of this?
Yeah, I mean, I totally agree with what Lynne was just saying there about these new opportunities outside of, I suppose, the traditional insurance world. But just taking it back as well to what Mark was saying earlier about the new entrants, I think there's a real opportunity there, because he was saying, you don't need to worry about them unless you're not going to invest in the business. And I can see, some of these new entrants being, real, I suppose, opportunities to learn and see kind of how they're disrupting and how that can be brought into, I suppose, more of an established kind of broking firm. And I think, embedded insurance, I think, is a fantastic opportunity for brokers. I know typically it's seen more as I suppose, an insurer play. But I think with the rise in technology we talked about earlier, those entrepreneurial and tech-savvy brokers have a real opportunity ahead of them if they can, plug into some of the online businesses that are out there, and that, could really, go straight into the insurance value chain. And I think that could be a real driver for growth for broking businesses. And it also has the potential to create a great customer experience. We've been saying throughout the session how important kind of people are in the insurance world, and at the heart of that, I suppose, is the customer. So, being able to build into that thing, I think, could be something we see a lot more of coming forward, over the coming months. And for brokers, I think it's a real opportunity there to create new revenue streams and, really help drive a business forward.
Thanks, Matt. We're coming to the last few minutes of the session, so I'm going to jump into some questions from the our viewing public. So one thing that I was going to touch on anyway has been asked by Keith Hector, who asks basically, what's your take on the role of appointed representative arrangements in plugging the startup gap? I don't know if anybody on the panel wants to raise their hand to take this one.
Yeah, I'll take that. I think it's a really important avenue, actually, for the startups. It's almost because the compliance and all of these kind of management systems are dealt with by the principal. It's if you like, an easier entry point for people than coming on fully delegated authority. Obviously, the FCA has been showing a lot of interest in the principles of appointed representatives lately, and it's very important that they're properly regulated and that they are managing those compliance responsibilities that they have towards the ARs. But yeah, I think it's a hugely beneficial avenue for particularly one-man bands who want to try try it out, see if they can do it. I think without those AR networks, actually, we'd struggle for some of the startups in the UK, because they, as they develop, they then become directly authorised, and in some cases, they could become quite large brokers. So yes, it's an important avenue, but one that I think, we have to look at what the FCA is saying and listen very carefully to what their requirements are there.
Thank you. I can see you nodding away there, Andy, but Mark, but is there anything else you wanted to add to that? Or should we...
I would just say appointed reps who are full-time insurance brokers, because of the entrepreneurial spirit that's inherent there, I would just cheer them on. Can continue to do that.
Okay.
I think it's going to be really difficult. I think the regulator has their eye on. Unfortunately, there's been some probably badly run appointed rep networks, and I'm not sure I'd want to be a principal. So I'll give a slightly contra view. So I think it's going to be a tough old place.
Okay, thank you. And I've got a question from Salim, who's asked, how do the panel believe brokers are handling the regulatory pricing changes compared to direct insurers? Does anybody want to take that?
Well, I'll take it.
Yeah, Mark. Thanks.
Look, I think everyone has looked at the changes, and I think everyone views that this year it's a case of let's see what happens, and wait and see if the market, if it calms down. I think that's whether that's brokers or direct insurers. I think we're seeing some things such as people. So one of the ways, you could start in, if you've not been in a segment before, you could put some prices into a segment because you've got no legacy. So we're seeing more of that. So we're seeing more diversification of segmentation again across the market. So some new entrants coming in space they've not been before, because it's price walking is not applicable. And I think we've seen the odd bit of brand stacking here and there, and clearly you've got the fact that the PCWs, that new business volumes have dropped. So, but I think it's kind of what is the new norm, and I think the general view for most people is they've put their foot on the ball and said let's wait and see what the new norm is. That doesn't mean we won't continue to invest and do all those great things for customers, because that's what people are doing. But equally, let's not panic into start saying, well, we need to, we need to make changes in a lot of, we need to make a lot of changes because what we're seeing in the market is all these funny things that are going on. I think we'll get a better picture of that as we get towards, quarter 3, quarter 4 of this year. But then you'll see people move into 2023. It will look far more stable. That's a personal view.
Now we are almost. Well, we are slightly over time, but I'm going to just ask you a couple of very quick questions that we've had come in, and if we can do these, they're probably not questions you can answer very quickly, but I'm going to ask you to, if that's okay. So maybe if one of the panelists can raise their hand, and whoever that wants to answer it can just can answer it. One is a question from Paul Harvey, who says that close to 90% of new issue motor business goes through price comparison websites, and it's 25% of the market and is a gateway product to other lines. What do brokers need to play a more proactive and meaningful role? And he's put in brackets here, technology or business model. So does anyone want to take that one?
Hey, I'm happy to start. Just in summary, surprisingly to some, still we find that about 25% of business placed by independent brokers is personal lines. It's often connected. It's often has an extraordinary sort of need in it somewhere. Often connected to commercial lines. I would suggest that the relationships are strong enough there for the independent brokers to maintain that position in personal lines broking. Again, they just need the products, and they need to make sure that they're accessible via their broker management systems, and that insurers are giving them vibrant, high quality products via broker management systems to get to those personal lines customers, to enable them to use the proximity of their customer relationship, because often that will beat the price comparison websites. There you go.
Great, thank you, brilliant, perfect, thank you, Andy. And the last question of the day goes to Sophia Geraghty, who asks something which we touched on right at the very start of this session, which was, when we talk about the war on talent, what roles or levels or areas of the market are we really talking about? Can you take that?
That's it really quickly, all of them.
Well, I think we'll end it there then. Thank you, Lynne. That's the last word. So yeah, that brings us to the end of the session. Thanks once again to Mark, Andy and Lynne for joining Matt and I. And thanks to all of you for tuning in. Look out for the abridged version of our underwriting performance report, our broker performance report, if you haven't seen it already. Insurance DataLab subscribers will receive the full report, which will be out in the next few days. They'll also have access to lots of deeper data and analysis on the performance of insurance companies through our digital insight platform, which includes things like ombudsman complaints volumes, upheld rates, customer and broker satisfaction scores, and comprehensive financial results. Feel free to email me if you'd like to know more, or you'd like to set up a free trial. I can be emailed at dan@insurancedatalab.com. Thanks again for watching, and goodbye for now.